Hello, good evening everyone. How is the preparation going on? Hello. Hello, am I audible? Okay. So let's start with this chapter 5. Last time we had done chapter 4 theory and practical questions from 1st to 15 of this chapter 5. Any problem regarding that from question number 1 to 15? If any doubt, then please ask. Should we start the next chapter 5 theories? Theory of chapter 5 and illustration 16 to 28 we have to do. Okay. P is 45 Z score. Okay, I will try to share the link. I will find the link and share. Z score page 45. Where is the doubt with regarding this? Same type of question we had done. The last question of this book. Same type of question. First 0 or less, greater than 0 and between the range 500 to 900 and between the range 300 to 600. Do the solution yourself because here it is not very clearly mentioned. Where is the doubt here in this question, Anand? Please ask your doubt in this question. Please
1 minute. 1 minute.
Okay, did you try this question on the basis of this one? The last question we had done. Last question of Z score, question number 14. Same question is there. 0 or less, greater than 0, between the range. In that question, range is 500 to 900. Here the range is 25 to 45. Same type of question is there. Z table I had shared and please see the value in that Z table. Z table is not given in the book. So I think try to solve this question on the basis of Z table I have shared because rest of the question is same. Rest of the points are same. So try this question once. If still there will be difficulty, then I will solve.
Okay, ma'am. No problem. Right.
Okay. Z table I have shared on the group. For the rest of the doubts, please write to me. I will solve that doubt. So let us start with part B, money market. Chapter 5. Theory of this chapter, money market instruments. So financial market, two types of market, capital market and money market. In this chapter, we have to read about money market instruments. So what are the money market instruments? First one, what is money market? In the brief, money market is the market where short-term securities are traded. Means securities with short-term maturity. So maturity period here will be less than 1 year. Participants, large number of participants. Individual, it can be bank, mutual funds, financial institutions, all can participate in money market, but not in all instruments. It provides funds to bank, that it helps to provide funds to bank. And this money market is regulated by RBI and SEBI. So what are the money market instruments? First one, call money, notice money market, treasury bill, commercial paper, certificate of deposit, collateral borrowing and lending obligation. Now first one, what is call money and notice money market? One instrument is call and notice money. To raise the fund in money market for the short term period, call money is used. So what is call and notice money? Here in money market, financial institutions, bank and mutual funds, they borrow or lend at interbank rate. This call and notice money instrument is not for individual. This one is for financial institutions, bank and mutual funds. They can only borrow or lend. And borrowing and lending will be at the rate of interbank rate. Means interbank rate is rate at which these financial institution banks, they can borrow or lend. So this borrowing or lending for call and notice money will be at interbank rate, and this is not for individual. Duration of loan, that borrowing will be for 1 day. If loan is borrowed for 1 day, that is known as call money. If loan is borrowed for 1 to 14 days, notice money. If more than 14 days, that is term money. So financial institution, bank and mutual funds, they can borrow even for 1 day, call money, 1 to 14 notice money, and this is known as more than 14 days, that is known as term money. Now bank borrow in this market to meet their sudden demand of cash and to maintain SLR and CRR with RBI. So generally bank and financial institutions borrow in this call and notice money market. That is one of the instruments in money market. So first one, call and notice money. Call money difference is here. Call money for 1 day and notice money 1 to 14 days. And this is borrowed to meet certain demand by the banks and maintenance of SLR and CRR with RBI. So banks can borrow with money market and call money and this notice money market. Another instrument is treasury bill, that is issued by RBI. Now what is treasury or T-bill? That is issued, this one is issued by RBI for whom? On behalf of government. If government needs the fund, that is the government issues treasury bill, and with the help of RBI, government issues the treasury bill. So fund is borrowed by RBI for whom? For government. So treasury bill is government instrument that is issued in money market. Investor, lender or buyer, who will be the investor, lender or buyer of this treasury bill? Lender of fund, or that is who will buy this treasury bill? Anyone can buy, individual, bank, financial institution, and dealers, they can also buy. But this call money, notice money, that is not for dealers and individuals. Here the maximum maturity period is 364 days. Money market instrument, maturity period less than 1 year. This is the maturity period with less than 1 year. So treasury bill has the maturity period maximum 364 days. Treasury bill are issued at discount and redemption is made at face value. Suppose the face value is 100, then it might be issued at 80 rupees. So the difference in issue price and redemption price will be the earning to the holders. The difference 20 rupees will be earned by the buyer of this treasury bill. So interest is not paid on treasury bill. What will be the earning? Only the difference between face value and issue price. So treasury bill issued by RBI, but it is issued on behalf of government. Anyone can buy it, individual, bank and financial institution, maximum maturity 364. Now what are the types of treasury bill? Today mostly we have to discuss about the theory of this chapter, chapter 5, and mutual fund practical question. So theory only for today. Now types of treasury bill. First one is auction, second is ad hoc, third is ordinary. In the book, when you will revise the syllabus, so this one we had done, and this is money market instrument. I have started with this one. Features of money market, functions of money market, prerequisites. These are the easy point. This one we will discuss in the last. What is the difference between capital and money market? So these we are doing in detail. Call money, notice money, and just I have summarized this chapter in this PPT. So types of treasury bill, 3 types: auction, ad hoc and ordinary. Now what is ordinary treasury bill? That is sold to public and it can be freely transferred from one person to another. Suppose if I am the buyer of this treasury bill, I can sell to another also. So this one is ordinary. Second one is ad hoc. That is issued to semi-government, state government and only foreign central bank. That is not open to the general public. Ad hoc treasury bill issued to semi-government, state government and foreign central bank. They are the buyers of this treasury bill. Third one is auction, and this one is issued with the help of auction. In the ordinary price, that will be decided by the government, but in this case, it is price will be decided with the help of auction. Now, what are the types of auction treasury bill? This in the book we are doing this thing. Treasury bill, that is on tap, ad hoc. On tap, this one is now closed. Now on tap treasury bills are not available. Ad hoc, that is this is the ad hoc theory, and auction, these are the types of auction. So we are doing this thing. Auction treasury bill. Now auction treasury bill, 4 types of auction treasury bill. First one is 14 days, 91 days, 182 and 364. It means the maturity period will be 14 days. Maximum maturity period is what? 364 days. So 4 types of treasury bill are there under the auction category: 14 day, 91, 182 and 364. 14 days, this one is issued in the multiple of 1 lakh. That price might be 1 lakh, 2 lakh and so on. For 91 days, this is issued in the multiple of 25,000. 25,000, 50,000, 70, it can be in this way. 182 days again, maturity will be 182 and here maturity period will be 364. But these three are issued in the multiple of 25,000, but 14 days treasury bill is issued in the multiple of 1 lakh. So this one is type treasury bill, auction, ad hoc and ordinary. Now on tap, this is not available now. On tap treasury bill, they had lost their relevance. Now this one is not issued. Ad hoc and auction are issued, and ordinary, it will be given somewhere in the book. That is ordinary treasury bill. So 2 instrument, treasury bill and call money, notice money. Third one is commercial bill. Now commercial bill. Commercial bill that is issued by seller or drawer. That one person, there are two parties, seller and buyer. Seller sells the goods to buyer, and for this, seller draws the commercial bill on buyer. Seller sells the goods to buyer on credit, and for this, buyer gives consent for commercial bill. It means seller will draw the commercial bill on buyer for amount of goods sold. And it can be, now this one is that is the proof. Commercial bill is the proof that goods are sold to the buyer and buyer will accept it. Buyer is also known as drawee, and buyer will accept it. Somewhat you have read in bill of exchange in account also. Same type commercial bill is like that. Now the seller can approach to bank for discounting of this bill. So this one is issued by seller. Issuer is seller, and or seller is also known as drawer, and this one is accepted by buyer. When one question in this one, why there is lack of commercial bill market in India? Commercial bill market is not developed is underdeveloped in India. Now why this one is underdeveloped? First one, cash credit and overdraft facilities available there. In the banks provide cash credit and overdraft facility to the person, to the account holders. So they don't need the commercial bill. They take the availability of overdraft facility. They use the overdraft facility and cash credit from the bank. Second, lack of discounting facility. All the banks do not discount the commercial bill. So the seller will have to find the bank for discounting of the commercial bill. So there is lack of discounting facility. Third one, difficulty in finding genuine bills. This bill is whether genuine or not. That is difficult for bank to find it. They will have to hire another department to find the genuine bills. So this one is underdeveloped in India. And next one, stamp duty is also there with commercial bill. So these are the some of the reasons why commercial bill is not developed in India. That is like bill of exchange. Now next one, commercial paper. This one is commercial bill, commercial paper. What is commercial paper? This one is again issued by corporates, primary dealers and financial institutions. Now corporate issuer condition for corporate is they should have net worth 4 crore. Only those corporate can issue commercial paper. Duration is 7 days to 1 year. Maturity period 7 days to 1 year. Interest. Now interest again same as the treasury bill. Commercial paper is issued at discount. In the case of treasury bill, what is the income for the investor? That is difference in face value and issue price. In the case of commercial paper also, the difference in face value and issue price will be the earning or interest for the investor. And this is issued by treasury bill is issued by RBI for government, and this one is issued by corporate and primary dealers and financial institution. But corporate should have net worth 4 crore, time period 7 to 1 year, and it is issued in the multiple of 5 lakh, 5, 10, 15. In this way, commercial paper is issued. Next instrument, certificate of deposit. This is issued by commercial bank, financial institution. Till this point, we have read commercial paper, commercial bill, treasury bill, and call money, notice money. 4 instruments. Next one, certificate of deposit. Certificate of deposit issued by commercial bank and financial institution, except regional rural bank and cooperative banks, they cannot issue the certificate of deposit. Regulated by RBI, and this one is issued in the multiple of 1 lakh. Duration of this one is for bank, it is 3 months to 1 year. The maturity period is generally 3 months to 1 year. The certificate of deposit issued by banks and financial institution, multiple is 1 lakh, maturity period 3 months to 1 year. Now next instrument is collateralized borrowing and lending obligation, CBLO. Now what is CBLO instrument? This is operated by Clearing Corporation of India, CCIL. CCIL regulates this collateralized borrowing and lending obligation. Here borrower and lender, any borrower and lender of this instrument, first it has to take membership from CCIL. A membership of CCIL will be taken for this one. And who are the participants here? Banks, private bank, foreign bank, cooperative bank, insurance company, mutual fund, they are the investors, primary dealers, NBFC, corporate, provident and pension fund. They generally invest in this one, CBLO. And members, they have to take membership first, CBLO membership. It is known as CBLO membership. Now members can borrow and lend fund against the collateral of eligible security. Borrowing or lending is done with the help of collateral, and that collateral will be securities. The securities mentioned there by CCIL. So this one is borrowing or lending with the help of collateral. And what is the collateral here? Securities, and securities will be prescribed by CCIL. And membership of CBLO will be taken first for the investment. And investors are these. So this is CBLO operated by CCIL. Now another type of instrument, these we have read. We have done so far these these instruments: call money, treasury bill, commercial paper, certificate of deposit and CBLO. Apart from this, some of the instruments are traded in money market is promissory note, and next one repurchase, repo loan, and government. These two are also there, promissory note. Now what is promissory note? This is written promise by one person, the one party, that party is known as issuer, to pay another party, and another party will be payee. What will be paid? That is fixed sum of money at fixed future date. So this one is written promise by one person to pay another fixed sum of money at fixed future date. That is promissory note. Now repo loan, that is repurchase agreement or repo loan. What is repo loan? Repo loan is sale of security to another person. First, sale of security to another person. First of all, the person sells the security to another party and then purchase it again at higher price. First, security is sold for the liquidity purpose, and again promise is made to purchase that security at higher price after the fixed period of time. And that date will be fixed and price will be fixed. That is, repurchase price will be fixed. So first, in repo loan and repurchase agreement, security is sold first, and then same security is bought by the person at higher price than the selling price. Means purchase price is higher than the sale price. And time period and date and price will be that purchase price will be fixed. Now what is the income in this case? Difference in sale and purchase price will be the income. That will be the earning. So security is sold first and purchased again at higher price. That is repo loan. Now the types of this one, that is based on the maturity period. What are the types of repo loan? This one is overnight repo loan, term loan, and open end. That is open loan. Overnight time period will be, maturity period will be 1 day, term greater than 1 day, and in this case there is no fixed duration. Time period is not mentioned. So overnight for 1 day and term greater than, if it is for more than 1 day, that will be term loan. Now next one, government securities. Apart from this, we have to study about government securities. This one was about the money market instrument. Money market instruments, repo loan, promissory note, CBLO, certificate of deposit, commercial paper, commercial bill, treasury bill, and call money, notice money. Call money, notice money, that is for call money 1 day, more if it is more than 1 day, notice money. Treasury bill by RBI maximum 364 days, and difference is face value and issue price, that is earning. Types: auction, ad hoc, ordinary. Auction 4 types: 14, 91, 182, 364. Commercial bill like bill of exchange, commercial paper issued by corporate and financial institution, maturity period 7 to 1 year, and it is a income is also the difference between face value and issue price. Certificate of deposit, that is issued in the multiple of 1 lakh, and commercial bill is issued in the multiple of 5 lakh. Commercial paper. Now CBLO, that is first it is sold, then bought. CBLO. No sir, the repo loan we were discussed. CBLO, that is operated by CCIL. Membership we have to take, and borrowing and lending is done with the help of collateral. Repo loan, first sale, security is sold, then purchased at higher price. Now, apart from this money market instruments, we have to study about government securities. Now, what are the government securities? Treasury bill, government securities, treasury bill we have read. Government bond, state development bond, and other bonds. These can be the government securities. Features. What are the features of government securities? It can be used as SLR with RBI. In the case of SLR, banks have to keep liquidity in the form of some liquid assets, and this government security can be used as a liquid asset for SLR purpose, that is statutory liquidity reserve. There is no default risk. Generally interest is paid half yearly. One question in exam question, risk involved in government security. This question has been asked for the theory. What are the risks involved in government securities? So I have mentioned the page number also for the detail. For the detail of this question, risk involved in government security. So the question has been asked, what are the risks involved in government securities? 3 types of risk. First is reinvestment risk, liquidity risk, and market risk. Now, what is reinvestment risk? That is the reinvestment of cash flow. In the case, reinvestment of cash flow means what? The coupon payment. That interest is not withdrawn by the person. It can be reinvested. But that reinvestment at lower rate in new securities. There is risk that the reinvestment, this cash flow, this interest can be reinvested at lower rate. It means rate of interest might decline. So when the investor invests in new security, rate of interest can be lower. That is reinvestment risk. There is risk of reinvestment of cash flow to get the lower rate in new securities. Now, liquidity risk is what? Risk of lower number of liquidity risk means the holder of government security is unable to sell when there is need of cash. The holder is not able to sell when cash is needed by the holder. Why it cannot be sold? Because there is lower number of buyers. So liquidity risk is risk of lower number of buyers or sellers. So this can be the risk, because in government security there is no default risk. Default risk means what? Default in payment of face value and interest, that is coupon payment. So that risk is not there, but what can be the another risk? Then decline in rate of interest, liquidity risk, that is a lesser number of buyer and seller. Third one is market risk, that is change in interest rate. If it is reinvested, then it can be the reinvestment can be at lower rate due to decline in interest. And third is market risk, that is risk of change in interest rate. And for this theory, written at 131, after this one, refer to the page number 131 for the detail to write the answer. 131 and 131 it is given, answer is given. What are the risks involved in holding government security? Market, reinvestment and liquidity. After this, bond valuation we have to read about value of bond. That is bond valuation. How to value bond? So bond valuation for this can be for short question, 2 marks, 2 marks to 4 marks question. Case 1, when there is annual coupon payment, that is interest is paid annually on the bond. In that case, what is bond valuation? That determination of theoretical price of the bond. Now how to find bond value? With the help of this formula. That is P is value of bond, C coupon payment, and this one is annuity factor, present value annuity factor. M is maturity period, that is face value, amount payable on maturity, face value of bond, and present value factor at that time when it is repaid. So valuation of bond is determination of theoretical fair value of the bond. And what it involves two things. First, we decide the present value of future cash payment. Now, present value of future cash payment is this one. What is the future cash payment? Coupon payment. So, we have to find the present value of coupon payment during the life of bond. And second is present value of bond on maturity, that is face value. What is the present value of bond? So two components are there in bond valuation. One is coupon payment, present value of coupon payment, and another is present value of face value of bond. We will do one question for this at page number 136. Please open page number 136 in your book. Page number 136. Bond valuation. Question here is, consider a 10-year 12% coupon bond. That rate of interest is 12%, time is 10 years, par value 10,000, that is face value 10,000. Assume that required yield on bond is 13%, that is for PV factor we have to take 13%. Find out the value of bond. So for the valuation of bond, two components are there. First, we have to find present value of coupon payment, that is interest. Now, what will be the interest on this bond? Face value is 10,000 and rate is 12%. And payment is, it is not written that it is paid semi-annually. So we will assume that payment is annual. So 12% on 10,000, 12%, that will be 120. 120 will be paid each year. And it will be paid for 10 years because the life is 10 years. So we will find the annuity factor at 13% for 10 years. So present value annuity factor at 13% for 10 years. Because this 120 will be received for 10 years. Now we will multiply this one. One component is this. Another is face value is we have to find the present value of face value. So face value is 10,000. On maturity, this one will be redeemed. So 10,000 face value. Present value factor at 13% for 10th year. For 10th year, PV factor is 0.295. This one we will take annuity value and this one will be present value only for 10th year. So this is for 10th year 0.295. Now this one will be theoretical value of bond will be 3601. When the payment is annual, we will find in this way. Valuation of bond. For 2 marks question it has been asked. This is the first case. Now next one. When there is semi-annual coupon payment, it means interest is paid 2 times in a year. That is semi-annual coupon payment. Now 3 things we have to remember here. One is annual coupon payment rate. Take the annual coupon payment rate should be taken as half, and rate of return, that is rate of coupon payment will be taken as half. Rate of return for PV factor as half. That is rate of return will be taken as half. Time period as twice. Time period will be taken as twice. So same question. 3 things we have to remember. Coupon payment will be taken as half. Rate of return PV factor, that will be taken as half. That is rate of return. Here if it is 13%, that will be taken as half. And time period 2 times. So one question we will do for this one. This is semi-annual bond value with semi-annual interest. Second illustration, after this one there is one illustration. Consider 8-year 12% coupon bond, face value 1000. Interest is payable semi-annually. So when this question is asked, please be careful whether it is written semi-annually or annually. If nothing is mentioned, we will take annually. If it is mentioned semi-annually, calculation will be done in this way. Required rate of return is 14%. Now 3 things we have to do. First, annual coupon payment rate will be taken as half. That is, coupon payment rate is 12%. It will be taken as half, that is 6%. So rate will be 6%. So interest will be 6% on face value 1000. So 1000, 6%, it will be 6. Interest formula will be the same, but interest rate will be half of annual. If it is annual, then take it as half. If the rate of interest is given semi-annually, then we don't have to make it half. But it is only written 12% coupon payment. It is not mentioned that this is semi-annual rate. So we have to make it semi-annually 6%. 6% of 1000, and PV factor, annuity factor. Now time period will be taken as twice. Time period is 8 year, it will be taken as 16. 16 will be the time period, and rate of return is 14%, so it will be taken as 7%. Now PV factor for 7% and 16 year. Present value annuity for 7%, 16 year, and this is interest. So first component is this one. Another is face value 1000 and present value factor at 7% for 16th year. This one will be 0.339. So for the bond valuation, difference will be for semi-annual, we have to take the interest rate as half, time period as twice, and rate of return as half. Rates को half कर देंगे, time 2 times लेंगे. So for 2 marks question, coupon payment, valuation of bond. Now again theory, what are the types of bond yield? After this, bond yield is given, types of bond yield. What are the types of bond yield? 3 types, that is current yield. What is current yield? Ratio of annual coupon payment divided by current price of the bond, that is current value of the bond, that is current yield to maturity, YTM, or it is also known as book yield or redemption yield. What is yield to maturity? This one is internal rate of return from bond when it is held till maturity by the investor. So what is the rate of return from the bond when it is held till the maturity? That is calculated with yield to maturity. But the calculation is not given in the book, only in the theory it is given. Calculation, this is again formula is used for yield to maturity. Yield to call. Yield to call is sometimes, what is call of bond? Call of bond is redemption of bond before the maturity period to repay debt early by the issuer of bond. So bond is called before the maturity period by the issuer. That is call of bond. Now what is yield to call? That is return earned from bond when it is held till the call period. This call period is mentioned that bond might be called after 5 years. So when it is held till the call period, what will be the return earned by the holder? So that will be yield to call. Yield to maturity when it is held till the maturity period. Now hedge fund. ज़्यादा हो गया theory. But now we have hedge fund, mutual fund theory. And after this, some practical. So hedge fund. Let's discuss hedge fund also, because lot of theory is in this chapter. If it will be summarized, then it will be easier for you to revise in the book. Hedge fund. Now what is the meaning of hedge fund? That is investment of fund, same as mutual fund, but there is difference between mutual and hedge fund. Here, investment of fund collected from accredited investors. Investors are high profile, high individual investors. Why it is high individual investor? Because minimum investment is 1 crore. If you want to invest in hedge fund, minimum amount of investment will be 1 crore. Now lock-in period is also high. That is, amount cannot be withdrawn before this maturity period. So hedge fund is generally for accredited investor, and investment is minimum investment 1 crore, and rest of the things will be same as mutual fund. Investment of fund collected from accredited investors like bank and insurance firm, they invest in hedge fund. Difference in hedge fund and mutual fund. First one, hedge fund investment by high net worth individual. Second, there is no reporting requirement. NAV calculation is not there in hedge fund. That calculation is not mandatory. But in the case of mutual fund, we will discuss that NAV calculation is periodical. NAV disclosure to investor is necessary. For the mutual fund, disclosure requirement of NAV is made by the mutual fund periodically. That is mandatory. But in hedge fund, it is not mandatory. Now, hedge fund is used for as a high risk strategy. Why high risk strategy? Because earning is high, to earn high return for the investors. So hedge fund is high risk strategy, and that is used by high net worth individual, and disclosure of NAV is not required. Lock-in period of hedge fund, that I'll have to check lock-in period. What is the minimum general lock-in period? Lock-in period was not mentioned. Only it is written high lock-in period. Time period for lock-in period, that is not mentioned in the book. तो लॉक इन पीरियड इट विल हैव टू बी चेक्ड ऑन. अब गूगल पे चेक कर सकते हैं कि लॉक इन पीरियड कितना है. इसमें सिर्फ लिखा है लॉक इन पीरियड इसका हाई होता है देन फ्रॉम म्यूचुअल फंड्स. अब म्यूचुअल फंड्स के भी लॉक इन पीरियड का इसका क्या टाइम है दैट इसमें मेंशन नहीं है. लॉक इन पीरियड इसमें सर्च कर लें हेज फंड में क्या लॉक इन पीरियड है, बिकॉज हेज फंड के भी टाइप्स उसमें, जब हेज फंड हमें सिलेबस में ज्यादा नहीं है, हेज फंड के टाइप्स होंगे एंड टाइप्स के बेसिस पे लॉक इन पीरियड होगा, तो फॉर इन जनरल लॉक इन पीरियड क्या है वो उसमें चेक कर सकते हैं।
30 to 90 days है मैडम,
30 to
90 days।
हाँ तब होगा, इसमें आप देख लें गूगल पे, बुक में मेंशन नहीं है इसमें लॉक इन पीरियड क्या है, 30 to 90 डेज उसमें है लॉक इन पीरियड, टाइम पीरियड। सो हेज फंड, now next one is mutual fund. For the mutual fund there are 5 units, 5 components of mutual fund. One is a sponsor, second is trust, third is unit holder, fourth is mutual fund, and fifth one is AMC, that is asset management company. We will discuss this one, but before that let's have what is mutual fund. Fund is collected from investor, and this collected fund is invested in securities like stock, bond. First of all, fund is collected from investor by the mutual fund, and it is invested in stock, bond, and money market instruments. And this investment is made by whom? They are known as money managers, asset manager, portfolio manager, person, or financial firm. Investor can be small and individual. Small investor can be in this one, but in hedge fund, high profile investors are there. Mutual fund, that is this one we will read later. And now what is mutual fund? Now we will discuss this one. Mutual fund, first it is registered with SEBI. One component sponsor. Who is the sponsor of mutual fund? Sponsor is promoter. Now promoter contributes 40% of net worth of AMC. That is 40% of net worth of AMC will be contributed by promoter, just as a promoter of company. Sponsor is like promoter of company, and 40% of investment is made by 40% of net worth that is invested by promoter. And it should be financial services. That sponsor will be only that person who is in financial services for minimum 5 years. प्रोमोटर वही होंगे जो एटलीस्ट फाइनेंशियल सर्विसेज में 5 years होंगे. Now what is asset management company? So sponsor, first one, sponsor are the promoters. Now asset management company, we have read that is mutual fund, collected fund from investor is invested. Now who invests this one? Investment is made by money managers or asset manager, that is asset management company. It is invested by asset management company. So it manages the fund, and minimum net worth for AMC should be 10 crore. And 40% of this 10 crore will be invested by promoter. So minimum investment net worth 10 crore, 40% by sponsor or promoter, and 50% director of this AMC will be independent. So AMC 50% independent director, minimum net worth 10 crore, and 40% investment by sponsor. Third one is trust. Now trust or trustee, mutual fund is set up as trust under Trust Act, and it holds the property of mutual fund. Means trust holds the property of mutual fund and checks whether it is invested for the benefit of unit holders. So trust has to check that investment should be made for the benefit of unit holders. And in the case of trust, 2/3 that trustee will be independent. Here 50% of the director will be independent. Here 2/3 will be independent. That means they should not be the sponsor. They should not relate it to AMC. Now next one is unit holder. They are investors. So mutual fund. After hedge fund, mutual fund theory will be there. So mutual fund theory, AMC. These we have discussed AMC. Now it will be easier for you to read this one. AMC, what is the function of AMC, and what is a sponsor, what is trust, and what are unit holders. Now, types of mutual fund. For types, theory is given at this page number, but I have summarized the types because a lot of types, this table is given here, this diagram is given. Mutual fund by structure, these two types, investment objective, this one, investment type, this one. So I have summarized this one, types of mutual fund for your convenience. First one is types of mutual fund on the basis of structure. One is open end, closed end, load fund, and no load fund. This is the diagram. By structure, open end, load, and no load. Now, what is the open end mutual fund? Here, shares issued directly to the investors. Shares are issued directly to the investors. Buy and sell at any time. Anytime we can buy or sell the mutual, invest in shares, and that investment will be made at NAV. Closed end means closed-end mutual fund that is issued only for the IPO. During the IPO, these shares are issued. So mutual fund investment this can be made during the IPO only. So the subscription period will be specified. Time period will be specified. Here, open-end mutual fund investment can be made anytime. That is resale purchase. And this sale purchase will be at NAV. But this one is issued only during the IPO. Only during the IPO investment can be made in closed end. So closed end difference is given here, open end and closed end. Open end fund is one which is available for subscription throughout the year because this is not issued only during the IPO, so it can be bought or sold anytime, repurchase anytime. They do not have fixed maturity. In the case of closed end, the maturity period is 3 to 15 years. Now next, open end, investor can buy or sell at NAV. Here price will be initial price offering, that price will be the selling or buying price. Can invest at initial public issue price. So this is open end and closed end. For the theory, open end, what is the difference between open end and closed end? Now next one, load fund, no load fund. So what is load fund? Load fund means here the sales commission is charged by the mutual fund from the investor. It can be front end load fund or back end load fund. This one is extra E hai yahan pe. Back end load fund, front end and back end. In load fund, mutual fund, commission is charged from the investor. And if it is charged at the time of buying, then this is front end. If sales commission is charged by the mutual fund company at the time of redemption of unit, that is closed back end load fund. So load fund means sale commission is charged front end at the time of buying and back end at the time of selling. No load fund means no sales commission is charged. So by structure, first diagram, this is by structure, open end, closed end. Now by investment objective. Now what are the types of mutual fund by investment objective? First is equity. Equity means investment will be made by the mutual fund or investment is made by the AMC in equities only. Balanced fund means investment in equity plus fixed income security. Third one, gilt fund, investment in bond. Gilt fund means fixed income security. So investment is made in bonds and fixed income security. That is gilt fund. Next one, income fund. Income fund, investment is made with the with target to earn current income in the form of interest and dividend. So investment can be made in preferred stock, bonds, but income should be high. Next, money market, that investment in money market instrument and money market fixed income securities are preferred in the case of this money market mutual fund. Index mutual fund, that is value of mutual fund, that unit will increase or decrease with the help of index BSE or NSE with whatever it is, that mutual fund is unit is tied, that value of unit that will be decided with the help of index value. In general, we decide with the help of NAV. But this index value of mutual fund, it will increase or decrease, and the valuation will be done with the help of index. So second investment type is this. Next one, investment type, investment objective, investment type. Means where the investment will be made. Industry specific, sectoral. Three types, industry specific, sectoral and index. Industry specific means investment in a specific industry, and that type of industry will be mentioned in the document of mutual fund given to the investor. Where the investment will be made, in which industry it will be made, that is mentioned. Sectoral, that is investment in certain group of industries or certain industries. Industry specific, about these industries it is mentioned in the document. About this it is not initially mentioned in the document. Again, index investment, that is investment is tied with the help of index value of NSE, BSE, S&P or any other index. Apart from this, there are also certain type of mutual fund. One is exchange traded. ETF, exchange traded, that investment in stock of particular index. What is exchange traded mutual fund? That is traded with the help of stock exchange, and investment of stock is stock of particular index, that is stock listed with particular exchange, and investment is made in that index stock only. So ETF, investment in stock of particular index value or particular index type only. ETF, another is funds of fund, that is investment is done in another mutual fund company. So funds of fund, investment in another mutual fund, SIP and SWP. SIP means systematic investment plan, that investment is made at periodical interval. Investment amount is made at the fixed interval. But SWP, systematic withdrawal plan. In the case of SWP, investment at once, investment will be made in one lot, but withdrawal of that sale or withdrawal of amount will be at periodic interval. Withdrawal is systematic here, here investment is systematic. That is investment at periodic interval, withdrawal at periodic interval. These are some of the types of mutual fund. Now, if you want to read the whole this content, then it will be easier now. थोड़ा सा आपको इजी होगा, इसलिए इसको सम अप कर दिया है, अदरवाइज बहुत डिटेल ज्यादा है इसमें. From here it is practical is given, NAV. इतना थ्योरी काफी है, और भी थ्योरी इसमें बताना है. आई थिंक दिस वन इज सफिशिएंट, बहुत ज्यादा है. Rest of the theory, now whatever you want to read from the book, read that theory. I will not say that do not read the theory. आप जितना पढ़ेंगे आप पढ़ लें theory इसमें, but summary is given in this PPT. उसको मैंने just sum up कर दिया है, theory जो आपके book में given था. अब तो कुछ questions practical part B, that is time weighted rate of return, rupee weighted rate of return, and from this illustration 16 से start करते हैं. Illustration 16, Sharpe ratio and Trainer ratio we have read last time. Sharpe ratio RP minus RF divided by standard deviation. Trainer में हम बीटा लेते हैं, that is Sharpe ratio RP minus RF divided by standard deviation. Question number 16 is for Sharpe ratio. ये कैलकुलेशन इसमें इसका निकाला होगा. To find the standard deviation के लिए इतना कैलकुलेशन है. This calculation is done for the standard deviation computation. So question number 16 and 17, that is based on Sharpe ratio and trainer ratio. 16 and 17 for Sharpe and trainer. 19 is also for Sharpe ratio and trainer ratio. In trainer ratio, we take the value of beta. Question 20. 20 is also for Sharpe trainer. So question number 16, 17, 18, 90 and 24 questions for Sharpe and trainer ratio. Question number 21, that is Jensen alpha. Now what is Jensen alpha? Actual return minus CAPM return. In the portfolio we have read Jensen alpha. That is difference between Jensen alpha is difference between CAPM return and actual return. Jensen alpha, this is the formula. Actual return minus CAPM return. So one question for Jensen alpha we will do. Question number 21 and 22 is for Jensen alpha. 22 is also for computation of Jensen alpha. Let us do question number 21. Question 21. Somnath Investment have floated a equity-based fund scheme XQ, the fund of which will be invested only in stock and bonds of this company. 60% of fund value is investment in company engaged in commercial construction and 40% in residential companies. Average beta is for this residential township is 1.9, and for this beta is 1.9, and for this beta is 1.4. Benchmark yields 11.2%, that is market return 11.2%, and RBI RF is 4.25. RF and RM is given, beta is given. Now we have to find ascertain Jensen alpha. So question has mentioned that we have to find Jensen alpha. So first we will think for Jensen alpha we need actual return and CAPM return. So we will find two things, CAPM return and actual return for these two types. There are two types, two schemes are there. And this one a residential township and construction. So step one is done. And first computation, step one is this one, beta computation, calculation of beta. Beta will be what? Now beta, combined beta, that is portfolio beta will be calculated first. Company scheme एक ही है, equity based scheme XQ, but beta is given, two betas are given for the 60% of investment in this and 40% in this one, and beta for these two are given. So first we need to find the beta. So first we will find weighted beta. How to find the weighted beta? Weight into beta plus weight into beta. So weighted beta 1.6. Now CAPM return, RF and RM is given. RF is given as 4.25 and RM is also given 4.25 and 11.2. Beta is 1.6 we have computed. So second step will be calculation of CAPM return 15.37. Now next one we have to find the actual return. Now actual return, for this values are given to find the actual return. This is for 1 year actual return January. So opening value will be given somewhere. Opening NAV for January is 17.75. How to find the return in the case of mutual fund? Capital appreciation plus dividend plus capital distribution gain if there is capital gain distribution. But in this case, no capital gain distribution when only dividend is given and closing NAV is given. So we have to find the capital appreciation and dividend. So capital appreciation for January to December. Opening value is 17.75. Opening is 17.75. Closing is this one. Closing is given. Capital appreciation will be difference between 18.6, 17.75. So capital appreciation will be 0.85. Dividend is not there. For next month, opening value will be this one, 18.6. Closing will be 17.8. Dividend is there. So 17.8 minus 17.8 minus 18.6 plus 0.75. It will be minus 0.05. Now we will find the return. How to find the return? That is this total return divided by opening NAV, purchase price. This is 4.79. In this way, we will compute for the all month, for 12 months. Now total value is 15.5. Part B, practical questions are very easy. 20 marks question. Generally, practical question is asked. So practice these questions. Part B easy होगा आपके लिए. Part B आप इसके ट्राई करेंगे. Part B के questions एग्जाम में गलत ना हो. It can help you to gain good marks in Part B. Theories तो आपका बहुत कम है. Theory फोकस थोड़ा कम कर रखेंगे. Practicals, beware of practicals. Practicals आप Part B बहुत आसान है. Part B पे आप questions इसके कर लेंगे. Now total return, total actual return 15.5, CAPM return 15.37. Difference will be 15.5 minus 15.37. Jensen alpha will be 0.13. So this is Jensen alpha. Now the evaluation, that is conclusion. Jensen alpha is positive. It means it has exceeded the expectation. Means market has, the security has done, the investment has done well. Actual return is more than the expected return. CAPM return is expected return by the investor, but actual return is higher. Actually, that return from this investment is higher than expected return. So the security has outperformed. So evaluation conclusion can also be given, however, it is not written. Only the question says a certain Jensen alpha. So we can write the conclusion also that security has outperformed. Now question number 22. I think there will be no doubt in this question. Question number 22. This one is also based on Jensen alpha. Question number 24. 24 we will discuss. That is computation of risk of loss. 24 and 25 is based on same thing. 25 pharma net selectivity. One more question was for risk of loss. 23 question will be, yes. 23 and 24 question. These two questions are based on risk of loss. Now how to find risk of loss? For this one question 23 and 24. 23 we will discuss here. 24 you do at home. After this we will discuss 25 and 26. Question number 23. There are monthly returns for average fund and market portfolio. Return for average fund and market portfolio is given. Ascertain the excess return under Morningstar index and rate its performance with compared to market portfolio. Risk-free return is given as 9%. Question again, that fund return from this fund is given and market portfolio return is also given. We have to find if there is any excess return under this investment. From January to December, this average fund return is given monthly. This one is monthly return. So monthly return for these months. Second, The question says market risk-free return is 9%. Risk-free annual return is 9%. So what will be the risk-free monthly return? 9% divided by 12. Monthly return will be this much. So monthly return 0.75. Here we have to find risk of loss. What is the risk of loss if investment is made in this fund? That is risk-free rate is 0.75. अगर आपने इस फंड में इन्वेस्टमेंट नहीं किया होता तो आपको कितना अर्निंग होता 0.75 का. That is risk free rate of return if invested in risk free in securities. So in the case of January there is no risk of loss. इसमें इन्वेस्ट करने से आपको कोई रिस्क है? कुछ नहीं है, क्योंकि 2% अर्निंग है आपकी. मिनिमम अर्निंग इज 2% and from risk free securities earning is 0.75. So there is no risk of loss. लॉस आपका कुछ भी नहीं है. For the second month, Feb, there is no risk of loss. For third month, return in third month is -1. And due to this investment, we have also lost 0.75. This amount is also lost because investment is made in this fund. So risk of loss will be -1 minus, that is plus this minus figure. This one, this loss is also there due to this one. So total loss will be 0.75 from risk-free securities and 1 from this security. मार्च में आपने क्या किया? इन्वेस्ट किया इस एवरेज फंड में, तो आपको लॉस हो गया 1% का. 1% मेरा ये लॉस है, प्लस इसकी वजह से, इस एवरेज फंड की वजह से मैंने रिस्क फ्री सिक्योरिटी में इन्वेस्ट नहीं किया, और नहीं किया तो वहां से भी मेरा लॉस. वहां अगर इन्वेस्ट किया होता तो आपको 0.75 का इनकम होता, तो वो भी मेरा लॉस हुआ. सो टोटल रिस्क ऑफ लॉस इज दिस वन, दैट इज 1 and 1 plus 0.7. और इसको आप इस तरीके से दिया है, इसमें 2 minus 0.75 जो कह रहा है उसका मतलब यही हो, रिस्क ऑफ लॉस. यहाँ पर रिस्क ऑफ लॉस, हियर द रिस्क ऑफ लॉस विल बी 1% ड्यू टू इन्वेस्टमेंट इन दिस फंड and 0.75 loss due to non-investment in RF, risk-free securities. Total this amount. Again for April, income is 2%. Greater than 0.75, there is no loss. For this, no loss, no loss. 0. September, it is 0. Means income from this fund is 0. So loss, risk of loss, इसमें invest किया तो आपको 0 आया, and loss is 0.75 only. If the company, the person has not invested in this one, earning will be 0.75. So here the risk of loss will be 0.75 only. Now for November, 2 and 2 plus 75, that is 2.75. Total will be 5.25. Any doubt? In the same way we will find for the market portfolio. Market portfolio, this is given second column. For this we will also find the risk of loss. This is the step 1. We are computing evaluation of fund, mutual fund investment and market. So this is step 1, computation of risk of loss. Risk-free rate is given. If any doubt, please let me know. Step 2. Second step. Now total return for 12 months is 15 and for market it is 16. Total return here is 15 and total return 16. Risk of loss, that is 5.25. Here 6%. Average monthly return, this is for 12 months. So for average return, monthly return will be this 15 divided by 12. Risk of loss for monthly risk of loss is 0.438. That is this divided by 12. Excess return. What is the excess return from this investment? Monthly return is 1.25 and loss is 0.438. So 1.25 minus this loss. The total return is 0.812. And in this case, in the same way, it is 8.3. So market return is 8.3 per month, and here the return is 812. So market performance is better. MSI, that is monthly income is for fund is lesser than market portfolio. So average fund has outperformed. We have to find underperformance and overperformance. But underperformance, overperformance, beta with the help of Jensen alpha we have also computed. But in this question, information regarding Jensen alpha, this all the beta values, these are not given. So we have computed with the help of risk of loss. So how to find with the help of risk of loss? Step 1, we will find risk of loss in two cases, that is for market and that is for average investment. Second step, we will find the return, that is difference between these two. 15 minus 5.25 or monthly it can be computed. Since all the computation is monthly basis, so we will find the performance on the basis of month. Any doubt in the question? 24 is also for that. एक सेकंड का ब्रेक दिया आपको पानी पीने के लिए because 25 and 26 question. Now we will do 25 and 26 question. These two questions are lengthy. Question number 25 that has been asked in the exam 25. Same type of question 25. Once it has been asked. Question 25, pharma net selectivity. That is evaluation of fund on the basis of pharma net selectivity. That was given by pharma. Before that, we will discuss what is pharma net selectivity. What is gain under pharma net selectivity? That is gain under pharma net selectivity. That is gain given by pharma is actual return minus required return. Same in the case of Jensen alpha. What we had seen, Jensen alpha is the difference between actual return and CAPM return. That is required return. Here also, pharma said that gain will be actual return minus required return. Now, what is required return here? In the case of Jensen alpha, required return was CAPM return. But in this case, required return is computed with the help of this formula. RF plus RM minus RF divided by standard deviation of market multiplied with standard deviation of portfolio. मार्कोविच मॉडल में आपने करा होगा ये फॉर्मूला, वहां से आप याद कर सकते हैं इसको. फार्मा नेट गेन, रिक्वायर्ड रिटर्न अंडर फार्मा नेट गेन इज RF plus RM minus RF standard deviation portfolio divided by standard deviation market. Now total risk under pharma net selectivity. This question, how to find total risk with the help of standard deviation approach. Total risk is standard deviation. Systematic risk is standard deviation multiplied with beta, and unsystematic risk is total minus systematic risk. So question number 25, same type of question in June 2016. Now the question says, first computation returns are given for three funds, three cases, average return, standard deviation, correlation. For this, and RF is given, RM is given, standard deviation of market is 4%. Correlation with market is given. Now we have to find total gain and net gain under pharma net selectivity. Total gain and pharma net gain. So pharma net gain is actual return minus required return. So we have to find required return. Actual return will be given in the question. Actual return is given, that is 25. Second, actual return is given here. Actual return minus required return. Required return will be computed with the help of this formula RM minus RF. Now RM minus RF, standard deviation of portfolio. We need four things. RM is given. RF is also given. Standard deviation of market is given. Standard deviation of portfolio is missing, I think, in this question. Standard deviation of portfolio. Standard deviation is given 10%. Standard deviation market, all the things are given. So this RM minus RF, standard deviation portfolio, this step has been computed here for this part 2. This calculation is given here. RM 11%. Calculation ये होगा आपका RM minus RF. This standard deviation of portfolio is 10%. Standard deviation, this one is 4%. RM 16 minus 5 11. So this step is part B. So pharma net gain is actual return minus required return. Actual return is given. Actual return is 25. Required return we have computed in this step. This step is required return. Now pharma net gain will be difference between this and this value. That is minus pharma net gain this computation RP minus RF. One computation will be step 1. One step, this one has been done. Now next step, average return 25, standard deviation 10. Correlation, this one is given 0.3. Portfolio beta, this one will be used in next step 0.75. Average return is given, but 5% risk-free return is also given. Total risk is only standard deviation. Pharma net selectivity, under this pharma net selectivity, it will be computed in this way. राधिका फार्मा नेट सिलेक्टिविटी के अंदर आपको कंप्यूटेशन ऐसे दिया हुआ विद द हेल्प ऑफ दिस फॉर्मूला, दैट इज फार्मा नेट गेन विद द हेल्प ऑफ दिस वन एंड टोटल रिस्क बाय दिस एंड सिस्टमैटिक रिस्क बाय दिस. अब ये आप चेक करेंगे इसमें सिस्टमैटिक रिस्क स्टैंडर्ड डेविएशन इनटू बीटा, दैट इज सिस्टमैटिक रिस्क स्टैंडर्ड डेविएशन इनटू बीटा. टोटल रिस्क, that is total risk is standard deviation of portfolio. Total risk will be standard deviation of portfolio. Standard deviation of portfolio is 10%. And systematic risk is 10% into beta. This is 10% into beta. 2 point, that is 7.5%. Under pharma net selectivity, जो हम निकालते हैं total risk and systematic risk, वो इस फॉर्मूले से निकालते हैं. और जो आपने पोर्टफोलियो में पढ़ा होगा वो वेरिएंस अप्रोच एंड स्टैंडर्ड डेविएशन अप्रोच, वो आपने वहां पे अलग पढ़ा होगा. टोटल रिस्क वहां पे वो जो वेरिएंस अप्रोच, दैट इज टोटल रिस्क जो आप निकालते थे वेरिएंस ऑफ पोर्टफोलियो, वो वेरिएंस अप्रोच से आपने पोर्टफोलियो में दो मेथड्स वी हैव रेड. पोर्टफोलियो, टू मेथड्स वर देयर, वेरिएंस अप्रोच एंड व्हाट वाज अनदर, स्टैंडर्ड डेविएशन अप्रोच. भूल गए फॉर्मूलास. एग्जाम आपका है, मेरा एग्जाम नहीं है. फॉर्मूला याद करें आप लोग. स्टैंडर्ड डेविएशन पोर्टफोलियो, सारे फॉर्मूलाज आप एक साथ लिखकर याद करेंगे. अब ओनली 15 डेज, 15-20 दिन, 15 दिन रह गए अब आपके एग्जाम में. 17 is 13 days and 10 days. हाँ, 15 दिन रह गए. ऑलमोस्ट ओनली 15 days are there. So variance approach in portfolio we have read variance approach and standard deviation approach. तो वेरिएंस अप्रोच में आप स्क्वायर लेते थे, स्टैंडर्ड डेविएशन स्क्वायर, बिकॉज स्टैंडर्ड डेविएशन स्क्वायर इज व्हाट, वहां पे स्टैंडर्ड डेविएशन स्क्वायर क्या है, वेरिएंस है, वहां आप इसे स्क्वायर करते हैं. फॉर्मूला एक साथ लिख लें. पोर्टफोलियो हैव लॉट ऑफ फॉर्मूला, सो प्लीज राइट ऑल द फॉर्मूला. ओके, मैं ही दे दूंगी आपको नेक्स्ट टाइम. ऑल द फॉर्मूलाज आई विल गिव यू नेक्स्ट टाइम. पोर्टफोलियो नेक्स्ट टाइम हम लोग याद करेंगे फॉर्मूलाज ऑफ पोर्टफोलियो. Now coming back to the question, pharma net selectivity, actual return minus required return. Now this one actual return 25 और इसमें आपको रिस्क प्रीमियम दे रखा है 5 का. That is actual return, average return and risk premium is also given. That is RF. Actual return will be computed in this way: RP minus RF, 25 minus 5, 20%. This is actual return. And second part, we have computed this required return. Required return was this much. Required return अभी निकाला था ये. This is 27.5. So 20% minus 27.5, 7.5. And for second part, what is systematic and unsystematic risk? So formula, इस formula पे आप इसे निकालेंगे. Systematic risk, standard deviation into beta, total risk this. In the same way for this and this security. So try these two questions for pharma net selectivity, question number 25 and question number June 2016. Now coming back, now next question, question number 26, 26, 27, that will be based on 26, 27 and 28. 26, 27, these are based on same pattern. 26, time weighted return and rupee weighted return. Now let us do this question, time weighted return and last question for today. आज के लिए last question, time weighted return and rupee weighted return. For the next time, if you have any doubt, अगर आपको किसी क्वेश्चन किसी टॉपिक में डाउट है तो आप मुझे पहले बता दें, ग्रुप पे आप मैसेज कर देंगे, so that I can come up with those question. उसको मैं रखूंगी आपके पास. अदरवाइज मुझे क्वेश्चन बुक निकालने में फिर क्वेश्चन रीड करना पड़ता है मुझे, तो दैट विल टेक टाइम. सो टू सेव द टाइम, इफ यू वांट टू डिस्कस एनी टॉपिक तो आप मुझे बता दें. If you will not say anything, then I will revise portfolio. I will give you the formulas for portfolio. I will discuss the questions that has been asked, previous 5 attempts questions. I will look for that, and those questions we will discuss, and formulas we will discuss for portfolio, and on Saturday we will discuss for derivative. Anything else? कुछ और कहना चाहते हैं आप? So please say. Meanwhile, we will start question number 26. Ascertain the time weighted rate of return and rupee weighted rate of return. These are the information. Fund value at the beginning 6 crore. After 3 months, there is an increase in 15%. After 3 months, there is again increase in 12%. And after 3 months, decline in value by 10%. During last 3 months, value of fund has increased by 1 crore. So first we will look the second table. There are two tables. This table, opening investment 6 crore. Investment at the beginning was 6 crore. For the first 3 months, जैसे जनवरी में स्टार्ट किया तो पहले 3 months में appreciation is 15%. So 15% of 6 crore has been appreciated. So increase will be 0.9, 6.9. Now after that again, after 3 months, after this 3 months again there is increase in value by 12%. So there is again increment in this value 6.9. It has increased by 12% and increase will be this much. After this, the amount will be, value will be 7.725. For the first 3 months, value has increased by 15%. That is, and it became 6.9. Investment has become 6.9. Again, it has increased by 12%. So it becomes 7.7280 at the end of 6 months. Now from this, in next third month, value has decreased by, पहले 3 month में ये, 6 month में ये, फिर 9 months में value decreased by 10%. Now the value will decline 10%. Decline will be there. It will be 6.9552. During the last 3 months, value has increased by 1 crore. In the last 3 months, increment is not given in percentage, it is given in amount. So it is increased by 1. Total amount will be 7.9552. We had invested 6 crore and its closing value is 7.9552. Now we will find the time weighted rate of return. That is time weighted rate of return, closing value, opening value, or it is known as holding period return. Closing value divided by opening value, closing value, opening value, closing, opening minus 1. That is holding period return. It is rate of return earned per rupee invested over the period of time. But withdrawals and further investment is not considered here. It means these investment, the question says there is cash outflow of 1 crore by way of dividend, and this point has not been considered here. For that is, withdrawal or investment will not be considered in time weighted rate of return. So this table is for point number 2. This is for time weighted return. So time weighted return, closing value is 7.9552 minus 6, appreciation is this much. Annual return will be 1.9552 divided by opening value 6, that is 32.59 annual, that annual earning on this one, annual return. Annual return, how to find annual return? As per normal procedure, that is closing minus opening divided by opening value. Closing minus opening divided by opening value. 32.59% per annum will be the return. Now what is the quarterly return? That is holding period return. Quarterly return information is given quarter wise. So what is the quarterly return? It can be computed in this way. That is closing value divided by opening value minus 1. That closing value divided by opening, closing divided by opening minus 1. For 4 quarters we will take, for all the quarters we will take like 6.9 divided by 6. For the first quarter, closing value is 6.9, opening is 6. For the second quarter, closing value this, opening is this. So in this way, we will take all the closing divided by opening in last minus 1. So this is the 35.06 is the holding period return or quarterly return on the basis of quarterly compounding. So for the first step, time weighted return, a certain time weighted rate of return and rupee weighted rate of return. टाइम वेटेड रेट ऑफ रिटर्न आप इस तरीके से निकालना है, एनुअल एंड क्वार्टरली. अगर आपको क्वार्टरली कंपाउंडिंग कहता है तो आप क्वार्टरली होल्डिंग पीरियड ऐसे निकालेंगे, एनुअल होगा तो आप यहाँ तक कैलकुलेशन छोड़ देंगे. नाउ नेक्स्ट वन, रूपी वेटेड रेट ऑफ रिटर्न. फॉर दिस वी विल लुक दिस टेबल. रूपी वेटेड रेट ऑफ रिटर्न, ओपनिंग वैल्यू 6, क्लोजिंग फॉर द फर्स्ट 3 month ओपनिंग वैल्यू 6, थर्ड मंथ के एंड में कितना है 6.9, तो फोर्थ मंथ के बिगिनिंग में आपका कितना होगा 6.9. नेक्स्ट वन, स्टार्टिंग विद दिस वन, ओपनिंग वैल्यू 6, एडिशन एप्रिसिएशन फर्स्ट मंथ में कितना था 0.9, दैट इज इंक्रीमेंट 6 का 15%. स्टेप 1 3 मंथ में इंक्रीज हुआ, सेम स्टेप है, यही है डिफरेंस, थोड़ा बस इसमें आपको इस पॉइंट का है. So first it has increased by 0.9. 1 minute. Second table. This is for time weighted return. सीमा, आर यू आस्किंग अबाउट दिस वन? ये टाइम वेटेड रिटर्न आपका जो होल्डिंग पीरियड रिटर्न है वो इस टेबल वैल्यू से लिया है. अगर उसमें कोई प्रिंटिंग मिस्टेक होगा तो आप चेक कर लेंगे इसको. दिस रिटर्न जो आपका लिया है टाइम वेटेड रिटर्न, दैट इज फॉर एनुअल, तो हमने ऐसे निकाल लिया. दिस क्लोजिंग 7.9 माइनस 6. क्वेश्चन नंबर 26 थोड़ा लेंदी है इसलिए मैंने आपको करा दिया क्वेश्चन, सो दैट आपको डिफिकल्टी ना हो घर पे. This 7.9 minus opening value 6 divided by 6, that is annual return, and holding period quarterly return आप इसका इस तरीके से निकालेंगे. Closing divided by opening. Formula is also written here. Closing divided by opening minus 1. और इसी फॉर्मूला को इस तरीके से लिख दिया. फॉर 4 क्वार्टर्स आप फर्स्ट क्वार्टर, सेकेंड क्वार्टर, थर्ड एंड फोर्थ ऐसे लेंगे तो फोर्थ क्वार्टर तक आप ये लेंगे. अब ये वैल्यू जो आपको लेना है वो इस टेबल में से देख कर लेना है. ये जो टेबल होगा इसका, बिकॉज इन द केस ऑफ टाइम वेटेड रिटर्न वी डू नॉट कंसीडर द विड्रॉवल और डिविडेंड वगैरह हम कंसीडर नहीं करते हैं. एडिशनल इन्वेस्टमेंट एंड डिविडेंड, दैट इज विड्रॉवल, इज नॉट कंसीडर्ड. दैट इज कंसीडर्ड फॉर रूपी वेटेड. नाउ सेकेंड स्टेप वी आर डूइंग रूपी वेटेड. पहला कैलकुलेशन हमने कर लिया टाइम वेटेड. नाउ नेक्स्ट वन rupee weighted, computation of rupee weighted rate of return. So for the rupee weighted rate of return, again we are computing the closing and opening value. So this is the table. ये आपका टेबल कंफ्यूजन इसीलिए है. टेबल ये जो आपका है that is for rupee weighted rate of return. So first step स्टार्ट किया था हमने 6 से, फंड वैल्यू 6, इंक्रीमेंट 15%, इंक्रीज बाय 15%, क्लोजिंग वैल्यू कितना हो गया 6.9. Now next for this closing will be opening for next quarter. Again appreciation 12%, so 12% increment will be there. And in this point it is said यहाँ पे आपको कह रहा है डिविडेंड है, डिविडेंड डिस्ट्रीब्यूशन इज 1. That is, now this point will also be considered. The 6.9 plus this and this withdrawal. There was outflow. Outflow है, आपने कैश विड्रॉ किया है 1 करोड़. That is ये 1 आपका इसमें से सब्ट्रैक्ट किया होगा. 6.9 plus this value appreciation is there minus this dividend withdrawal. Outflow of 1 crore. Then it will be 6.7280. Now this value, again this opening value for the third month, 10% value has declined by 10%. So declined, ये decrease किया 6.7 minus this amount 6.0552. ये वैल्यू हमने लेस किया 10% डिडक्शन. During the last month, it was increased by 1 crore. So this closing opening for last quarter, 1 increased by 1 and it will be 7.0552. तो दोनों में आपका डिफरेंस आएगा. वो डिफरेंस इस वजह से आया because there is dividend distribution and dividend it has been, dividend reinvest नहीं किया है, वो आपका आउटफ्लो है. यहाँ पर लिखा है, अगर ये पॉइंट लिखा होता there was an dividend of 1 crore and it has been reinvested, तो वो फिर आपका increase हो जाता. But this is outflow of 1 crore. Investor has withdrawn this one, so there is outflow. तो ये लेस कर देंगे हम 1. So this table for rupee weighted rate of return, opening and closing value will be computed in this way. Any doubt in this one? For rupee weighted rate of return, step 1 is this: closing and opening value, rupee weighted rate of return. Steps I have written. First step, we have to find the opening and closing value. So this is the opening and closing value for rupee weighted. Any doubt in this one? कुछ doubt है तो आप बताएं. Now next step, return. Now we have to find the return. Annual return, same as time weighted rate of return. What will be the return? Rupee weighted के लिए पहला step आपका ये है, second step यहाँ है. Second step is this one, computation of return. That is dividend plus capital appreciation. Dividend is 1 crore, capital appreciation closing minus opening. So closing is this, opening is this. तो आप रुपी वेटेड के लिए ये फिगर्स लेंगे एंड टाइम वेटेड के लिए दिस टेबल विल बी कंसीडर्ड. So this is capital appreciation plus dividend 2.00 this one and divided by opening value. This is annual return. ये आपका annual return आ गया 34.253. So step 1, find annual return. Annual that is return for the holding period 8.56. ये आपका annual holding period return है. यहाँ पर 8.56 मैंने को लिखा है. दिस इज फॉर होल्ड फॉर क्वार्टर. एक क्वार्टर के लिए आपने निकाला तो एक क्वार्टर का आपका रिटर्न आया 8.56. अगर एनुअल बेसिस पे होगा तो आप एनुअली लेंगे. सो फर्स्ट स्टेप आप होल्डिंग पीरियड के अकॉर्डिंग रिटर्न निकालेंगे. सेकंड स्टेप इज द फर्स्ट स्टेप क्लियर. हमने पहले फर्स्ट स्टेप फॉर रुपी वेटेड रेट ऑफ रिटर्न फर्स्ट वी विल फाइंड द ओपनिंग एंड क्लोजिंग वैल्यू एंड कंसीडर द विड्रॉवल और investment amount. We have to take this one additions, that is appreciation and distribution or dividend or decline in value. Now on basis of this capital value we have to find return, rate of return, annual return, that is closing minus opening, capital appreciation plus dividend 1 divided by opening value. So this is the return. Now for one quarter we are computing for quarter holding period, that is quarterly basis 8.56. Now 8.56 step 2. Now next one for rupee weighted rate of return 8.56 is the return. This will be in between 8 and 9%. ये आपका 8 और 9% के बीच में है, आता है. So अब जैसे अब इसका IRR वैल्यू निकालेंगे. Now we will find the IRR. How to find the IRR? आप IRR कैसे निकालते हैं? अब IRR के लिए यहाँ पे आपको हिंट मिलता है इससे, that is 8% and 9% के बीच में आपको वैल्यूज लेना है. At 8% डिस्काउंट फैक्टर and 9%. So first holding period return निकाल लें. Next take the discount factor between these two. 8.56 will be between 8 and 9%. So discount factor will be taken for 9% and 8%. Second step we have to find NPV. यहाँ तक आप रिटर्न निकालने के बाद NPV निकालेंगे and NPV will be for 2%, that will be at 8 and 9. और ये 2% कौन से 2% लेने हैं वो आप निकालने के लिए ये निकाला है हमने. Rupee again, once again, rupee weighted rate of return is IRR, internal rate of return. And for internal rate of return आप कैसे निकालते हैं? NPV at 2 discount factors. तो यहाँ पे 2 discount factors खोजने के लिए हमने इतना कैलकुलेशन किया है. So this calculation is for only for the computation of 2 discount factors. Now 2 discount factors will be 8% and 9%. Now at 8% and 9% we have to find the NPV. So NPV अब यहाँ निकालें आप 6 और ये जितने भी आपके वैल्यूज थे, dividend 1, closing value this. So NPV starting 1. अब इसका PV फैक्टर लेंगे. डिविडेंड डिस्ट्रीब्यूशन आपका सेकेंड पीरियड में है, दैट इज PV फैक्टर्स का 9% पे लेंगे फॉर सेकेंड पीरियड, थर्ड पीरियड एंड फोर्थ पीरियड. दैट इज फॉर क्लोजिंग और ओपनिंग के लिए. और कुछ डिविडेंड होगा आपका जो मिलेगा आपको, दैट इज कैश विड्रॉवल और जो आपका इनकम होगा उस पे. टोटल इट विल बी, डिस्काउंट करने के बाद आपका इतना आया पॉइंट. NPV विल बी पॉइंट सेम एज ए PV फैक्टर. 1 आपका प्लस में आएगा, 1 नेगेटिव में आएगा. So 1 value will be in minus and 1 in plus. Recall the computation of IRR. वहां भी आप NPV निकालते हैं. 1 is just lower than, less than NPV and 1 is higher. So 1 value will be in minus, 1 will be in plus. This, and now use this value for the computation of IRR on the basis of payback period. On the basis of backward and forward method. IRR जो आप निकालते हैं backward and forward method, now it will be applied after this one. that is backward and forward method. This computation is for backward. ये निकाला है आपको R2 फॉरवर्ड मेथड यूज किया है यहाँ पे. फॉरवर्ड मेथड के बेस पे यहाँ पे IRR कंप्यूटेशन इज डन विद द हेल्प ऑफ फॉरवर्ड मेथड और ये कैलकुलेशन आपका 8.207 एंड और इसको 4 से मल्टीप्लाई किया दैट इज एनुअली 32.828. So for rupee weighted rate of return, computation will be first step. Rupee weighted rate of return, first make this table, closing and opening value, and this closing and opening value and dividend that will be used for computation of NPV. And second step, annual rate of return, find out the holding period rate of return, annual return and holding period return. And this will be used for discount factors, that is 8% and 9%. At 9% we will find NPV, at 8% we will find NPV, and these two values will be used to find IRR with the help of forward or backward method. Any method can be used and find the IRR. In this case IRR 8.207. This is per quarter. इसको आप annually 4 से multiply करें, annually निकालें. Now rupee weighted rate of return is this much per annum, internal rate of return. So rupee weighted rate of return is internal rate of return. Question 27 आपका 27 is not based on rupee weighted, ये general question है. 28 question I think that will be for rupee weighted. Single question आपको दिया है, that is annual rupee weighted and time weighted. Rest of the questions are on general average annual return. So 28, 29, 27, 28 ये आपके questions हो जाएंगे, but I think in 20 this question bonus issue है. 27 question में bonus issue है, तो bonus issue आप देखेंगे इसको. If any doubt arises, let me know for the bonus issue. Only one question was there for rupee weighted and time weighted. कोई और भी question होगा तो आप बता देंगे. Practice this question 26. Time weighted rate of return. Again just summarizing this one, time weighted. Simple आप calculation करेंगे without taking dividend and reinvested value. And holding period return will be computed. For rupee weighted return, step 1, on the basis of withdrawal and addition, we will find opening and closing value. Then we will find the holding period return, and that will be used as consideration of discount factor, and find NPV at these two discount factors, and then find IRR with interpolation or with backward or forward method. तो इतने स्टेप्स हैं आपके रूपी वेटेड. अब आप ये क्वेश्चन करके घर पे देखेंगे, कोई भी इसमें डाउट आता है, आई थिंक इसके कैलकुलेशन में कहीं पे कुछ फिगर्स में है, आप इस देख कुछ गलत हुआ तो आप बताएंगे. कुछ एरर है मेरे ख्याल से, somebody has asked, पूछा था कभी, तो आप लेंगे वो यहाँ से लेना है आपको ये टेबल्स. इफ देयर इज एनी मिसप्रिंट तो आप उसे करेक्ट कर लेंगे. नेक्स्ट टाइम व्हाट वी विल डिस्कस अगली क्लास में पोर्टफोलियो और डेरिवेटिव्स. क्या पहले करा दूं, पोर्टफोलियो और डेरिवेटिव? लेट मी नो दैट. अपार्ट फ्रॉम दिस वुड यू लाइक टू से एनीथिंग? पोर्टफोलियो स्टार्ट करें नेक्स्ट टाइम, पोर्टफोलियो, या फिर छोड़ दूं डेरिवेटिव्स एंड पोर्टफोलियो? अब तो तो अलग अलग चीजें हैं इसमें. somebody portfolio majority options. ओके कई लोग पोर्टफोलियो बोल रहे हैं. मैं ऐसा करती हूँ ना. लेट मी डिसाइड नाउ बिकॉज somebody is saying derivatives and पोल भी नहीं कर सकते इसमें. मैक्सिमम पोर्टफोलियो एंड डेरिवेटिव्स बोला है. सो आई एम प्लानिंग टू स्टार्ट विद पोर्टफोलियो. कर देती हूँ रिवाइज फर्स्ट बिकॉज फॉर द पोर्टफोलियो आई विल गिव द फॉर्मूलाज को दे दूंगी. फॉर्मूलाज आपको याद करने में भी 10 टाइम लगेगा. तो ड्यूरिंग दोस टाइम पीरियड फॉर्मूलाज याद करेंगे. नेक्स्ट क्लास विल बी ऑन 24th. 24th you will get almost 10 days. 10 days for portfolio formulas. Memorize all the formulas. And on 28 उसके 2 दिन गैप पे ही आपकी क्लास है. 28 फॉरेक्स करवा दूँ. फॉरेक्स में आपको याद तो करना नहीं है कुछ, रिवाइज करने में. फॉर्मूला बेस्ड है नहीं पोर्टफोलियो. ज्यादा है उसे कर लेते हैं पहले. विल रिवाइज दैट वन 2 days पोर्टफोलियो एंड डेरिवेटिव्स. कुछ भी डाउट्स हैं आपके तो आप प्लीज मुझे बता देंगे so that I will revise that topic. ओके फिर इतना पढ़ ले ऑलमोस्ट काफी है. So I will meet next time. Next Tuesday we will meet. Next Tuesday 24th. Till then, set of formulas I will give you. Yes, please. I will give you those formulas. I will share. I will make the PPT on the basis of formulas and question asked. Previous year question. I will look for the previous year questions and formulas, and I will summarize all those and give you. PPT मैं आपको शेयर कर दूंगी नेक्स्ट टाइम. ज्यादा टाइम नहीं लूंगी आपका मैं नेक्स्ट टाइम. हो गई हैं आप प्रिपेयर करें. नेक्स्ट टाइम मैं शॉर्ट में आपको रिवाइज जस्ट आई विल रिवाइज दैट वन टेकिंग योर लेसर टाइम. आज तो पूरा 2 घंटा हो गया. बट आई विल टेक लेसर टाइम फ्रॉम द नेक्स्ट 2 classes so that you can revise. Please revise at home. We'll see you on next. Not see only, I can hear you. We'll meet on next Tuesday. Till then, bye and revise. Thank you everyone.